Through conversations and discussions with attorney friends of mine, I'm hearing that perceptions of liability protection, if you have an LLC or corporation as your entity of choice, is not quite what we might think. Courts are allowing the piercing of the veil and liability against the principal or owner going forward, just like that of a sole proprietor. Any comment on that? Mark, I'm so glad that you asked me this question. I do have a comment on it, and I'm very glad that you asked me, because a lot of people either starting new businesses for the first time or starting second, third, or fourth businesses have this question. I answered a similar question just recently from a serial entrepreneur. But just because he's been there and done that with multiple businesses doesn't mean that he's taken the time to learn everything that there is to know. And he wanted to know what other options and considerations are out there. There are two things generally that will pierce the veil. And before I tell you what those are, I want to remind everyone that the veil is liability protection. You are not your company. Even if you own the company, you are not in fact your company. You're perceived as, generally speaking, two separate entities, two separate taxpayers, two separate entities for liability purposes if there is any liability protection in place. So if somebody slips and falls, they sue your company, and if there is a corporate veil, your personal assets are not at risk of being seized if you can't pay personally for whatever settlement or judgment may come your way. So, and it's not just a slip and fall. I mean, if there's any kind of legal issue, it's whether or not your personal assets can be touched, can be forced to be handed over, or if it's only your business assets. There are two types of actions in general that can cause that veil of protection to be pierced. One is fraud. If you commit fraud and then your company can't pay its debts because you've stolen all the money from your company, yeah, your vendors can go after you personally. So your personal assets can be at risk. The other thing is commingling funds. And let me tell you, as an accountant with many clients, and I've been doing this for 14 years, almost every client I've ever seen, when at the beginning of starting to work with them, they have commingled funds. They're not tracking it with an intercompany account, which would provide a little bit of protection there, but at least they're tracking it. But they're commingling funds. What this means is they're using funds they own company A and they own company B. They're using funds from company A to pay the bills of company B. Or even worse, they're commingling their personal and business funds. There's no business bank account. They're using the business to pay for their personal expenses without recording them as distributions. Or they're using their personal account to pay for the business but not recording everything. When there's so much commingling, I absolutely agree with you, Mark. The courts, if there's ever an issue, they will say there's so much commingling here going on. The liability protection that you think you bought when you filed your LLC paperwork, you lost the LL in the LLC, my friend. And those are the two ways to do that. And I'd like to just take a moment to highlight the fact that a great advisor, especially someone at the CFO level, can not only alert you as to the risks of a situation like this, but can keep your information flowing where it needs to go. If you're a business owner, you've been commingling your personal and business funds, or if you own multiple businesses and you're thinking, my gosh, I just took a customer check earned by customer B and earned by company B, but put in company A's bank account. Oh, bleep, I just commingled funds. And I want to come clean. I want to do it right, but I can't erase the past. A great accountant who understands intercompany funds can track it correctly for you. And if there's ever an issue, you can say, yes, I did that, but I tracked everything appropriately. Best case scenario, I had company A pay back company B for those funds, and we made it right, and here's proof. So having great accounting and great business intelligence can absolutely save you not only risk, but save you money. And that is no joke. Mark, thank you so much for asking that question. It's one that bothers a lot of small business owners, and I can tell you from personal experience, more small business owners who own multiple businesses are in trouble in that area.